Hello everyone, Mike Arnold here, co-founder of Path Trading Partners along with Bob Iacchino. This is for one of our viewers wondering about AMD and Qualcomm. So, and if other people want to, if we have some time, if you want to do some very liquid traded stocks, if we have some time, we'll throw them out there occasionally to do a quick analysis and just see how our analysis techniques apply to a bunch of different stocks. Right now, this is a weekly chart. And this is a sort of sloppy double bottom that was triggered a couple weeks ago and now pulling back. And we've talked about these double bottom patterns, how we really focus on the area between the peak and the candle body of the candle that formed the peak and watch for pullbacks in that area, which we are pulling back to. We also have the first cross rotation zone right below that. So here's some key support coming in here. First key level key support we tested last week, and it's about 2250 area. And we do have support all the way down to 21.29. I'm saying this is sloppy because of this little wick down in here. We like to see a smooth pattern, but it's not going to invalidate it for me, and it was triggered because we got the close above the levels. Now, way we do our analysis on this, and again, there's no guarantees on this, just pointing this out because it is a more reliable pattern, but again, no pattern is perfect, and this is for educational purposes only. So the stop reduction where the stops generally moved up is around the 2750 area, and then this could be a full target trade. If you wanted a two target, it'd be about 2944 and 3133. You can always move those like 2950 and 31 or 3150. You see it, that's clearly in the whole path right here. There's no major stops or blockages, so it is a pretty decent pattern forming there. If we got back below, this is the 50-week moving average, if we got back below about the 1875 on a closing basis, this pattern would be invalidated and considered stopped out because it has been triggered. That is what we have. You can also see, just for what we look at, we talked about all the time, before this major run up, here's where it paused before, so we had resistance. Then if you come and look at the sell-off, we have the concept of resistance. If you go over here, becoming support, and that's what helped form this double bottom pattern. It's just a longer term outlook for AMD. Switching over to Qualcomm, again, this is a weekly. I'm doing the macro perspective. We have the rotation zone against us on the weekly. So first key level, we're really around the 53 area of key resistance. I'd say 53 to about 53.50. See, this is prior support becoming resistance. So the bottom rotation zone to about this 53.50 is going to be the first level key resistance if you do get through there. Next major area, and this is going to keep declining, but right now I'd probably target around the 56 area just in front of the bottom of the rotation zone. This is very key support we're coming off of. So this is right now is a 3-year chart, and you can see support back in April of last year, support in September the year before, support all the way back, what was that, in 16 in April, and April again. So that's very key. Let's zoom out to even a bigger chart. Let's do a 10-year. So you can see this level. You can see all this support right here. That's a really key level you'll want to be watching for. Right around this 49.50, you could move it down to about 49. On a closing basis, if you get a close below 49, we're into what we call a clear path move. We still have a gap down here from back in, what was that, in February of 16. So we'd be watching our first target then. If we close below there, we'd go into pretty bearish mode, means this key support did not hold, and we'd be targeting then about 44.70 first target, and the second major target would be about 43.50. That takes us to the end of this clear path move. Also, you see these little tails spiking down there, and if you go all the way over here, back until, what year was that? 10. Wow, a long time ago. You can see that little shelf of support. So you had resistance over here, sold off again, came up here, broke through that resistance, and then came back and made this little shelf for support. It found support there again back in the 16, and that's the key area we'd be looking for. And that's only if this 49 area is broken on a closing basis, preferably a weekly closing basis. So right now, before looking at all to get bullish, we'd have to get above the weekly rotation zone and get some more price action favoring us before we'd be watching for an extended run-up in Qualcomm. That's how we'd analyze that, just from an educational perspective, and sort of gives you the bigger picture. I can jump to daily real quick for Qualcomm and just see what it looks like. So it's finally getting, maybe eking out the rotation zone. Little selling coming in today. Not a firm, solid close yet above the rotation zone. Yesterday closed in it. Today gapped open, but then closed back in the rotation zone. What I'd be watching for first is to get the rotation zone back in the favor, which would mean the shorter moving average, the yellow line, is above the blue line, and then start watching it catch rotations back up. You can also see the 50-day exponential, which is one of the key moving averages we follow, is just above this major other support. So on any short-term targets to the upside, we're looking at about 54, and that also fills this gap. You see this gap back from the week 22nd to 23rd of January, this gap down. That gap has yet to be filled, so that's something I'd watch for on any continued rally. So what we have for you on Qualcomm, and we'll talk to everyone soon. Bye for now.